Hi, let's start our 70 finance question that are most asked in the interviews. So, what is finance? Finance is the management of money, including investing, borrowing, lending, budgeting, saving, and forecasting to maximize value. Explain working capital. Working capital is equal to current assets minus current liability. It measures short term liquidity and operational efficiency. What are the three financial statements and how do they link? Income statement, net income flow to retained earning on balance sheet, cash flow statement reconciles net income to cash changes. What is free cash flow? FCF. FCF is equal to cash from operations minus capital expenditure. To be honest, the cash available to investor after maintaining operations. Difference between cash and profit. Profit is accounting measures, revenues minus expenses. Cash is actual liquidity. Profit can exist without cash and vice versa. What is EBITDA and why it is used? EBITDA is earning before interest, taxes, depreciation, amortization, proxy for operating performance and cash generation. What is NPV? Net present value discounts future cash flow to present value using a discount rate. Positive and NPV adds value. What is IRR? Internal rate of return is a discount rate making NPV is equal to 0 used to gauge project returns. Explain WACC. WACC is weighted average cost of capital, is a blended cost of debt and equity used as a discount rate for valuation. Equity versus debt, pros and cons. Equity, no mandatory payments, dilutes ownership. Debt, tax deductible interest, increases risk via fixed obligations. What is leverage? Use of borrowed funds to amplify returns and risk. Financial leverage increases ROE but also default risk. What is working capital cycle? Time between paying supplier and collecting cash from customers. Inventory to receivables minus payable times. How do you value a company? Company can be valued with the common methods DCF, that is intrinsic, comparable multiples, precedent transactions. Walk me through a DCF. First, we forecast cash flows, choose forecast period, compute terminal value, then discount by WACC, sum PVs, which is equal to enterprise value. Difference between enterprise value versus equity value. EV is firm value to all providers, that is debt plus equity minus cash. Equity value is EV minus net debt, that is value to shareholders. What is the sensitivity analysis? Testing how valuation results changes when the key assumptions vary, example growth, margins, or discount rate. What are financial ratios you track? Liquidity, current ratio, profitability, ROE, net margin, leverage, debt, EBITDA, efficiency, inventory turnover. Explain ROE and ROA. ROE is net income divided by equity. ROA is net income divided by assets. ROE shows return to shareholder. ROA measures asset efficiency. What is beta? Beta measures asset systematic risk relative to the market used in CAPM to estimate cost of equity. Explain CAPM. Cost of equity is equal to risk minus free rate plus beta equity risk premium. What is leveraged buyout? LBO. Acquisition financed largely with debt. Buyers use target cash flow to service debt and aims for high equity returns. What is depreciation versus amortization? Depreciation allocates tangible asset cost. Amortization allocates intangible asset cost over useful life. What is a bond's duration? Duration measures sensitivity of bond price to interest rate changes, weighted average time to receive cash flow. What is credit risk? Risk that borrower will default on obligation. Central to lending and credit analysis. How do you assess creditworthiness? Analyze cash flow, leverage ratio, interest coverage, collateral, industry outlook, and credit history. Explain working capital management techniques. faster receivable collection, inventory optimization, negotiating payables, and short-term financing. What is hedge and why hedge? Using instruments like option, future swaps to reduce exposure to price, rate, or currency volatility. Difference between forward versus futures. Forwards are OTC, customizable contracts. Futures are standardized and exchange traded with margining. What is an option? Right, not obligation to buy and sell an asset at striking price before or on expiry. Call is equal to buy, puts is equal to sell. What is mark to market? Valuing asset liability at current market price rather than historical cost. What is goodwill? Excess paid over fair value of net identifiable asset in acquisition, intangible reflecting synergy, brand. Explain accrual accounting. Record revenue when earned and expense when incurred, not necessary when cash changes hand. What are deferred taxes? Assets and liability. Difference between accounting and tax treatment that will reverse affect future tax payments. How do you perform ratio analysis for credit decision? Look at leverage, that is debt divided by EBITDA, coverage, EBIT divided by interest, liquidity, and trend divided by peer comparison. What is capital budgeting? Processing of evaluating and selecting long-term investment, NPV, IRR, payback, profitability index. Explain payback period and its weaknesses. Time to recover initial investment, ignore cash flow after payback, time value of money unless discounted. What is working capital financing? Short-term funding source to support daily operations, overdraft, working capital loans, factoring. How do you forecast revenue? Use bottom-up unit pricing, unit divided by pricing assumption, or top-down market size into share and validate with historical trends. What is covenant? Covenant are formal agreements often found in finance, property, and religion setting specific action or restrictions to protect the parties involved. How do you calculate WACC brief? WACC is equals to equity divided by total value into return on equity plus debt divided by equity plus debt into return on debt 1 minus tax rate where V is equal to equity plus debt. What causes difference between accounting and cash flow? Depreciation, accrual changes in working capital, non-cash expenses, and timing of cash receipts and payments. What is double entry bookkeeping? Every transaction affects at least two accounts. Debit is equal to credit to keep accounting equation balanced. How do you value a startup? Methods could be discounted cash flow with caution, comparable multiples, venture capital method, or scorecard approach often rely on growth potential and comps. What is dilution and anti-dilution? Dilution is equal to reduction in ownership when new shares issued. Anti-dilution provision protect early investor from dilution. How do you compute levered and unlevered beta? Unlevered beta is equal to levered beta divided by 1 plus 1 minus tax into debt divided by equity. Used to remove capital structure influence. What is treasury function? Manage cash, liquidity, funding, bank relationships, FX and interest rate exposures. What is working capital turnover? Sales divided by average working capital minus measures efficiency of working capital use. Define interest coverage ratio. EBIT or EBITDA divided by interest expense. Ability to service interest payments. What are contingent liabilities? Potential obligation depending on future events, example lawsuits, that may be disclosed in notes. How do you prepare a budget? Start with strategic goals, revenue forecast, expense estimate, reconcile and create variance tracking. How to handle missing data in a model. Use conservative assumption, interpolate, run sensitivity analysis and document source uncertainty. What is scenario analysis? Build best case, worst cases to test impact of macro or business changes on financial valuation. What is interest rate swap? Contract to exchange fixed versus floating interest payment to manage interest rate risk. Why would a company repurchase share? To return capital to shareholder, increase EPS, signal undervaluation, or adjust capital structure. What's a deferred revenue? Cash received before earning revenue recorded as a liability until performance obligation met. How to analyze margins? Compare gross, EBITDA, and net margin over time and versus peer. Investigate drivers like pricing, costs, and mix. What is the convenient breach and consequences? Violation of loan terms can trigger default, higher rates, renegotiation, or acceleration of debt repayments. Describe a time you improved a process. Behavioral. Use STAR. Briefly state situation, task, action you took, example, automated report, and measurable result. How do you prioritize tasks under tight deadlines? Triage by business impact, communicate timelines, delegate, and use focus time blocks to deliver critical items. What is FX risk and how to manage it? Currency exposure from foreign operations, managed with natural hedges, forwards, options, or netting. What is a capital lease versus an operating lease? Capital lease finance transfer ownership like benefit, risk, and capitalized operating lease treated as expense. Accounting standardized updated require capitalization under IFRS and US GAAP note specifics. How do you present complex number to a non-finance executives? Simplify to key messages, use visual, focus on drivers, impacts, and offer one-page summary with recommendation. What KPIs are important for our industry? Tailor answer. Example, retail, same store sales, inventory, turnover, gross margin, SaaS, ARR, CLV, CAC, churn. What is the difference between budgeting and forecasting? Budgeting sets planned targets, forecasting updates expected outcomes based on current trends. How to calculate enterprise value using multiples. EV is equal to multiple into metric. Example, EV upon EBITDA into EBITDA. Choose appropriate peer multiple and adjust for difference. How do you model working capital in projection? Tie AR, AP, inventory to day, DSO, DPO, DIO, and convert to balance sheet changes based on forecasting revenue or costs. What makes you a good fit for this finance role? You have to personalize it, summarize relevant technical skills, result industry knowledge, and culture fit. Give a brief example of impact. How does an issuance of new shares affect EPS? EPS is equal to net income divided by shares outstanding. Issuing shares increase denominator and typical dilutes EPS under earnings grow. How to price an IPO? Mix of valuation, DCF comps, demand assessment, book building, and market conditions. Underwrites set offer price. Difference between marketable securities and long-term investments. Marketable security is short-term, highly liquid, long-term investment held for strategic reason or more than 1 year. Thank you for watching it till the end. We have completed 70 questions that are usually asked in a finance interview. If you like it, please comment down. And if you didn't understand any of the question that has been discussed here, do comment down. I will for sure resolve it. And if you are eager to learn more, do follow us and be with us. Thank you so much.